During the introduction, perfect. During the introduction, is there anything you'd want me to add about yourselves that you would just put it into the chat for me if you wanted to say, wanted to add something in there as well. Some sort of interesting fact or something. Daniel, you didn't grow up in Brooklyn, New York, did you?
No. I grew up in Rio de Janeiro, Brazil.
I know. We had talked about that. So that'll be a fun thing to share as well. Brazil is doing a lot with cryptocurrency. I understand they're one of the hottest markets for crypto, lots of funds there.
There is actually the interesting bit there's a lot of fintech. So they made it very easy to open an online banking. So receiving an online banking license is relatively straightforward, and the idea is exactly what we talked about: emerging markets and so on. There is obviously a trade-off to that. There has been an increase in financial fraud as well, unfortunately, as a result of that. But it's definitely something. It's moving very quick, quite impressive, actually.
It's interesting in that the countries you wouldn't have expected or weren't thinking about, Brazil and then El Salvador coming off the dollar. Of course, Nigeria being one of the largest.
A lot of it starts from capital controls, right? Those are countries that have capital controls.
Yeah.
Usually it's the combination of capital controls and inflationary flares. I mean, that's the ideal combination to support fintech and cryptos, digital, all that.
Dean, we see your background.
Yes, I'm at the Talent Pavilion now.
Thank you. Welcome.
Yeah.
Daniel, inflationary flares. Okay.
Growing up in Brazil, I remember actually you went to the supermarket and each product would have a label with a number, and then there'll be a table with those numbers. So you would refer to, because they would change prices for each product several times during the day because inflation was so high.
That's it.
So that's the precursor of the QR, right?
Right.
It was like a manual QR. So and I remember, I mean, literally you go and you look at something and there'll be like a thing in that, like in the top of the wall with the numbers, and you just had to go and find the number and then match to find the price, right? That's how it worked.
Fascinating. Feeling that okay, we have a lot of people in the waiting. We have some people in the waiting room. I guess we should move people over. Not sure why they aren't coming in, but let's get them moved in. we're going to start in just a couple minutes here. Thanks for joining us early in the morning. We'll be starting in just a couple minutes here. Thanks everyone for coming in.
Oh, where's the fintech at?
Hey Sue, good morning. Thank you for coming in.
Good morning, Keith.
Yep, we'll start off with a little bit of a soft introduction. I really appreciate the Monetary Authority of Singapore, who has put together for the past several years now, both the Singapore FinTech Festival and the Talent Pavilion. And the Talent Pavilion is the educational arm. It's where the agencies, the key stakeholders come together to help the general public know all about fintech so that we can build talent, what we call growing our own timber and more. And so within this, we have the Talent Pavilion, which is made up of not only the agencies and the government, but also the institutes of higher learning. So we're really excited to be able to collaborate together. Once a year, we come together in a big way to help pull this all together. So just a big thanks to those of the organizations that help pull this all together in here. These are our partners here that you should be aware of. And of course, as part of this, there's career support and also employer support. So a lot of employers and headquarters have been set up in Singapore. In fact, Singapore is the home to more than 46% of the multinationals who have headquarters in Asia. And in collaboration with the major agencies, we work together across the IHLs as well. So all the schools are involved in this. And we have sessions throughout the day. So as you come here for this session today, don't hang up the phone. Well, that old saying, hang around on Zoom. We have 10 sessions today and 10 more sessions tomorrow, all of which are going to be just as exciting as this session here. And so look forward to seeing you in some of the other events that go on. So we are at the start. Today's session, Reimagining Innovation. And I'm really glad to be joined by dear friends and colleagues as well, and also visionaries. Everyone on this panel here has had very tough questions posed to them and in a number of different forums. And in addition, they are on the forefront in terms of what we ought to be looking at in business, the types of questions that we should be asking. And the roles that are available today need these answers, but the roles that'll be available and are being created for tomorrow are going to be shaped by the answers. So come in, bring your questions, bring your video. It's a good Thursday morning. You're welcome to join us on video here as well. If you haven't yet fixed your hair, I understand it can take a little while to get that all in place, but we'll also start off with a picture after the first speaker. That way everyone gets a chance to put on the right hairstyle and everything else. It only takes me a little bit to get my hair in place, but I understand it can take longer. So as we'll go along, we'll be taking pictures throughout the session. As we go along, please feel free to put questions inside the chat and we will address them either right after the speaker or during the panel session. Today's session is all about how do we look at the new technologies in crypto, which are being developed for privacy in the first instance, perhaps a different way for us to move the store of value in the second instance. And ultimately, these were crypto digital currencies also represented a new way to send information in a secure manner and guaranteed delivery. We can't forget that blockchain is a new communications protocol. And so as we go through this morning, that foundation is going to be making up how we look at these things, how we discuss things as well. I'm so glad to have with me today, Dean Mohan. He's going to be kicking off our session. And just to start us off on the right foot, then we'll be going through each one of the speakers. So let me introduce a dear friend and also my boss, Dean Mohan, who is the head of the School of Computing in National University of Singapore. But also we graduated from the same school many years ago, Rensselaer Polytechnic Institute. And so back in the cold upper regions of New York, where we were both studying, but in different departments and as well. But nearly the same time, Dean. I don't think we're far apart as well. He is the Provost Chair of Computer Science. And before becoming Dean, he's also the NUS Vice Provost for graduate education. So he's been a visionary in terms of shaping our graduate education at school at the overall university. He was also associate provost as well, and he was vice dean for academic affairs prior to that. His research is all in multimedia, and I'm always amazed whenever I get to hear his research talks or get to see some of the things that are going on. He was, years back, he was looking at photos and not just one person to see their expression, but a group of people to understand what situation they were in. Did I get that right, Dean Mohan?
Yes.
Okay, and that was wonderful. You know, are they arguing, like something a bit further ahead than just are they smiling or not?
Yeah.
So really giving some great cognitive power to computing. And more than that, he's looking at authentication and privacy. He runs the Encrypt Lab, which is at NUS as well. So so glad to have you here, Dean. Please lead us into the session.
Thank you very much, Keith, for that very kind introduction. I have no hair issues, so I'm prepared always. You know, as we wrap up this somewhat forgettable year, we know that COVID-19 has left no industry untouched, decimating some, but others have scaled to greater heights than ever before. The crypto market now is at US $3 trillion, and the largest of banks, JP Morgan, Goldman Sachs, UBS, they have all implemented active business units. Matt Damon did a commercial with Crypto.com recently. So today in this event, you'll hear from venerable institutions like the 250-year-old Bank of New York Mellon, founded by Alexander Hamilton and Aaron Burr, revolutionaries in their own right. But today, BNY will be looking forward as how to regulate, but not squash the new tools in the economy. DEA will talk about cryptocurrency play to earn gaming that is helping people in emerging markets to survive and even make a living in spite of COVID-19, which dropped tourism and trade war that reduced business everywhere. SDF will describe about putting the power of banking in the hands of the young and the underserved. This can motivate entrepreneurs to try out the Stellar Development Foundation's DLT. Big business needs sophisticated money management that keeps them in compliance, but works at the speed of e-commerce. So Ripple and exchange tokenomics will talk about the new developments available for foreign exchange, decentralized lending, and end-to-end payment visibility in real time. Rajesh from Raja & Tan, Southeast Asia's largest law firm, will question, does owning an NFT mean you own the intellectual property? And also I will discuss the future of NFTs. Our own Professor Kawai Huang will moderate a panel at the end to bring together these thoughts and these thought leaders. There's bound to be disagreements, as even the best experts in the field are sure how these developments will pan out in the future. Of course, that is precisely the point of organizing this event, so that we can put our minds together to jointly chart our way through the very uncertain future. However, one thing I do know for sure is that the National University of Singapore School of Computing is proud to be at the forefront of thought leadership with several grounded labs and initiatives. As just a few examples, the Singapore Blockchain Innovation Program is hosted in our school, which does research, builds systems, and provides technical resources for blockchain projects. The NUS Ripple Fintech Lab, supported with the generous support from Ripple, it's a world-class teaching facility for building our talent ecosystem and nurturing our students. The NUS Crystal Center, which is supported by actually private sector donations, conducts very original research on some of the toughest problems in algorithm security and blockchain tools. Encrypt, which is the NUS Center for Research in Privacy Technologies, is a strategic capability research center in privacy preserving technologies with outstanding research and global impact. Last but not the least, I just want to cite the example of a very exciting society, the NUS FinTech Society. It is a group of young students passionate about blockchains, machine learnings, and DevOps. They are the volunteers who have supported Talent Pavilion for past several years. They are now more than 200 members strong, and in my opinion, they represent the future of fintech in Singapore. On behalf of the school and this entire group, we are delighted to welcome you to this event and look forward to growing the fintech ecosystem together. Hope you have a wonderful event.
Thank you so much, Dean Mohan. Really appreciate that. And this is such a new area, guys. You hear all those new terms coming together, but so many different groups looking at it. And it's critical that we have all minds looking and considering what the future looks like. Dean, thank you so much for your leadership to have pulled together all those organizations, all the people, all the supporting researchers, and sponsoring many of those ideas as well, so that we can run together into this field and help to guide it so that it's put together in practical ways, avoiding risks, and most importantly, avoiding nonsense like scams as well. So really appreciate that principled aspect. Thank you, Dean.
Thank you.
Okay, with that, I'd like to introduce our first speaker of the day, Daniel Tenengauzer. Daniel is a head of market strategies at Bank of New York Mellon. As the dean mentioned, 200-plus-year-old bank. And if you watched Hamilton, they were somewhat talking about it in that play. So it's always fun. If you missed that, go back and rewatch it. But in his role, he tries to make sure that, understand what the currency flows are like, where are they going, and how things are going to be moved. Bank of New York moves a lot of currencies and a lot of flows, with 2.2 trillion in assets under management and 46 trillion in total custodial assets. I mean, I didn't know there were $46 trillion in the world. Interesting to see that one bank has them under management, as a custodial system. And he has 20 years of cross-asset experience looking across buy side, sell side. He looks at macro, but digs deep into the impact on micro aspects as well. So you can see him really play the whole aspect of the business in terms of monetary flow. I always learn something from him. So join me in doing that this morning. And by the way, Daniel is not from Long Island, even though he's with New York. He's originally from Brazil, Rio as well. So really cool to make those big moves and come into New York. But Brazil is like one of these crypto capitals now as well. So Daniel, take us away, give us some color on this whole topic.
Thank you so much. So I'm going to try to be as disciplined as possible. I was given 7 minutes, so I'm going to stick to the 7 minutes that I was given. I wanted to actually focus on three issues that are keeping us busy right now. And all the numbers that I'm bringing up are basically taken out of the most recent financial stability report that came out of the IMF about 3-4 weeks ago. Also an academic paper that Ken Rogoff and Carmen Reinhardt published also on cryptos. I'll be using that data to discuss some of the topics here. So point number one that I wanted to raise is volatility, right? I mean, obviously, we're very, very focused on the value at risk. Just to give you one example, when cryptos adjusted earlier this year, the loss of value was equivalent to $1.3 trillion. Okay, just to put this in perspective, that's roughly half of the market capitalization of the smallest companies traded in the United States under the Russell 3000, right? So again, yes, it's a new technology. It's important to push for a new technology, but what is it more important, to push for new companies under the Russell 3000 or to support the new technology, the cryptos? If you actually look into Sharpe ratios over the past 7 to 8 years, cryptos are actually probably the worst Sharpe ratio if you compare to the other major asset classes because of that volatility, right? So yes, returns have been spectacular, but volatility has also been spectacular. And as a result, Sharpe ratio really is below things like leveraged loans, like high yield credit, like emerging market credit, the S&P 500, and so on. So that's point number one. Again, the value at risk is phenomenal, and it's important to keep that in mind. Point number two is what I call the shadow banking system that is created under stablecoins. So I'll take just one example, Tether, which is the largest stablecoin at about $63 billion, is essentially backed by about 34% of cash and T-bills, 49% of CDs, and 7.7% of corporate bonds, right? Now, you can basically trade a stablecoin instantly, right? Many of those instruments cannot be traded instantly. So there is definitely a settlement mismatch between the two things, right? What the stablecoins are backed from and what stablecoins promise to give you, right? An additional example, right? We're actually getting closer and closer to the so-called X date, which is the debt ceiling date. In the debt ceiling date, basically, there is a risk that T-bills payments are postponed by 2 or 3 days until the situation is resolved. What happens with the T-bills that are backing those stable coins? So again, point number two is when you create a shadow banking system, you must make sure that the mismatches make sense, right? And you don't have a liquidity a risk that is too large. Point number three that I wanted to make is on ESG. And here I had a very heated debate early this week. Just to give you one number, 0.36% of global electricity used today is essentially used by mining of digital currencies, right? That's equivalent to the electricity used by an economy such as Chile, right? Or Belgium for that matter, right? So the question is, does it make sense to allocate that much energy into cryptos, right? A second issue that also connects to ESG is the usage, right? And again, here, Rogoff and Reinhardt actually put together a very interesting article where they go over the database of local Bitcoins over 4 years, and they come up with basically somewhere between 7 to 10% as being the share of trading that is used for wealth transfer, so essentially transactions, right? And even if there was to be an extreme case, and again, they use a power outage in Venezuela to come up with this number, the usage could go as high as 30 to 40%. So still 50 to 60% of the trading really happens for speculation. Right, and again, they actually build a very, very interesting algo that I recommend you to go and take a look. Now, once they actually break down by country, they find that the majority of the users are really in emerging markets, which is a good thing, right? Again, digital currencies promote trading in emerging markets. They ease concerns around capital controls, right? But also it means that they are unregulated and they could facilitate social and governance issues, right? So obviously, when it comes to ESG, there is very clearly a collision that could happen between cryptos and the ESG, the nascent ESG industry. So something to watch out very, very closely. So with that, I'll take it back to you. I think I was almost exactly 7 minutes. So I'll take it back to you, Keith.
Thank you, Daniel. Wow. Very good points there. And I like the point of the Sharpe ratio. Very interesting, right? Lots of growth. Everyone says it's up and up, but we always have this a way of forgetting the downs, especially when the euphoria of the ups like it is now. So thank you, Daniel, for highlighting that for us. In the electricity portion, something that we should take a close look at, especially in this time of ESG. So I know organizations are trying to work through better electricity, reduced usage there, key aspect. Okay, well, Daniel has kicked us off. And now we want to bring in Rajesh. Rajesh is another dear friend who heads up the technology and media and telecommunications practice at Raja & Tan. Raja & Tan is the largest law firm in Southeast Asia, second largest in Singapore, and goes back and forth with a competitor, more than 800 lawyers. He also is the co-founder of the Rajan Tan Technologies and Rajan Tan Cybersecurity. Whoever thought a law firm would have a cybersecurity arm? Interesting. He could tell you more about that separately as to why they set that up. But he advises not only just clients, but also governments as well, in terms of what should the regulations be. And I was really heartened by some of the work he's done throughout the emerging markets, from Africa all the way to the Philippines, in terms of guiding governments on what they ought to be doing in regards to bringing in technology. He has been recognized as the top tier 1 lawyer in the publications such as Chambers, Asia Pacific, and the Legal 500 since 2008, consistently recognized. He's also been recognized as Lawyer of the Year and as the best lawyers in 2021, and an elite practitioner in technology and telecommunications by Asia Law Profiles. Not only that, but I also enjoyed listening and talking with him too, and learning from him. So let's welcome Rajesh here. Thanks a lot for joining us today, Rajesh.
Thank you. Thanks, Keith. That's probably taken up more than the part of my 7 minutes already, so appreciate that. So guys, you see the title there, why the hype, why the lawyers? Well, what do you expect? If you see hype, you'll see lawyers there. It's inevitable, right? But there's a serious point to this as well, which is that, the nature of NFTs and the way it's been developing means that there is a need for some degree of certainty for business to happen, and for the value that you ascribe to the NFTs to be understood by the marketplace. And because it's new, as Keith and as Daniel has very eloquently shared earlier, it also means that there's a need for certainty as to what exactly you're getting, how exactly you can deal with NFTs, and also how does NFTs actually work in the longer term, beyond the initial hype. And so you have issues like flexibility that needs to be addressed, right? Because it's an NFT, any kind of data can be encrypted. Can some of that data be personal data? And what happens then because of the nature of NFTs? Can it help in terms of resistance to fraud because of the certainty that you have with the blockchain technology? Does it remove intermediaries? Removal of intermediaries is always a good thing, right? Disintermediation means money is saved. You don't unnecessarily pay people to do a custodial or trust role, including lawyers in some cases, which is always a good thing. But then, it also leads to potentially lack of credibility of the NFTs. There's also issues with regard to monetization and publicity that people have used NFTs for. You notice that what that leads to is speculation, right? When people are intrigued by new technology, there's always, in a sense, a greater value ascribed than what is actually due to that technology until the hype cycle goes down. All well and good if you're selling newspapers and you're writing articles, but if you're actually taking that product and you're giving it to someone else and saying this product is worth $1,000, and that person buys it and then realizes that the actual value is well below that, you have created a legal issue, right? For the buyer, potentially misrepresenting the value, and for the seller, buying something that is potentially near worthless, which means he loses all of his money, place to put it simply. But there are other challenges as well, things like insider trading, the fact that NFTs creates an extra layer of value, and that can lead to a very new model of arbitrage in the economy between traditional assets and the new assets. And how do you make money between the two? It also creates very new hedge models as well. We were just talking recently about the electricity market in Singapore, and the fact that the smaller electricity companies had to leave the market because they couldn't effectively hedge. The question that was asked then is, why wasn't there a secondary market where hedging could actually happen? And could that have been driven by a blockchain-based asset? So there are these new issues, new ways of creating value that never existed before that can lead to the sustenance of inherently unsustainable business practices that you see today. That's a good thing in a sense, but it can also be abused. And again, that's why lawyers need to come into play to sort of, not just lawyers, but let me be clear, it's the legislators, the governments looking at putting in place rules and regulations. And then the lawyers try to come in and help interpret these rules. So those are some of the points. I won't go through all of them because I do have a 7-minute cutoff point. So let me just jump straight into some of the key challenges and where the law will come to bear. Some of the key areas would include areas like software licensing issues. And I want to touch on the fact that, when you buy an NFT, you don't necessarily buy the underlying IP rights. There's concerns with regard to automatic royalties. As you may well know, those in the tech space would be very familiar with this. But let me share this for those who are not. And with that technology, there is the ability to run what is known as smart contracts. These are contracts that run automatically and have an impact again on the value of the NFTs. It can also lead to a specific cut in the value, and that value cut being sent back to the original sender in the form of royalties, automated royalties. So each time when you sell on an NFT, a certain value of the NFT is actually automatically deducted and sent back to the originator of the NFT. All well and good, except again, do the people who buy these NFTs know that there is that underlying cost, continuing cost in a sense to the NFT? Very few people have. And again, that leads to confusion, unhappiness and apprehension of the content. So do be aware of some of these issues. I'll skip the issue of proof of ownership because I'll talk about it when we look at the specific key points. The first point that often people come out with is the key issue: are NFTs in fact legal? At present, when you deal with non-fungible tokens, they appear to fall, within the definition of a digital payment token if it is used in that context. But they have not been accepted, obviously, as payment for goods, because often people say, well, if I were to use it as a token of value, it will be more along the lines of barter. Right? I have this NFT, I give you this NFT, you give me something else in exchange. So it's not really being used in a currency sense, which is great because that's the way it should be. And just like you have seen the discussions over virtual currency as to whether or not it is truly currency, those who've been following the Singapore FinTech Festival have already heard, Ravi Menon and his views that we shouldn't be talking about virtual currency because it's not really currency anymore. We should be talking about digital assets. We should be talking about tokenization. And I think that is a very powerful message to the industry as a whole, that shift away from using this term currency so loosely. And if you take that context and put it on NFTs, you'll clearly see there's never any intention for NFTs to be used as fiat, as traditional currency, as a token of value. So we tend to adopt that approach as well from a legal perspective. There are also legal issues with regard to data protection and privacy. And here again is a technical point which leads to a legal complication. Any data they put on a blockchain becomes immutable. Immutability means you cannot erase that data. Unfortunately, one of the cornerstones of a lot of data protection laws around the world is the concept of the right to be forgotten, also known as the right of erasure. So you put personal data on something that's inherently unerasable, such as the blockchain, it leads to what we call an incurable violation of the GDPR, and also, for those who are not aware, an incurable violation of Singapore PDP, Personal Data Protection Act as well, in terms of our retention principle, which means you cannot keep data forever. At some point, you need to delete that data. Well, guess what, guys? If you put that data on a blockchain, you can't delete the data because the data is immutable. So lesson to learn, don't insert personal data on the blockchain. It means immutability. It means immediately an incurable violation of data protection laws and regulations. So be extra careful on that point. That's a construct that the developers and the creators of NFTs need to take into account. But there are also other issues as well. And I want to end on some of the issues with regard to intellectual property, because it's one of these areas that often people don't quite get. When you buy an NFT, you're getting a right of ownership that you express through a token, and that token captures your right on a blockchain, which means that it's immutable, there's certainty, you can prove ownership. But what are you proving ownership over? You're not necessarily proving ownership over the underlying intellectual property rights. You are saying that you own a token. That's it. It does not mean that because you own that token, you own the underlying intellectual property right. It also means, therefore, that the person who sells you a token is not representing to you that he or she actually owns the intellectual property over the digital asset that represents that token. And here is the complication, because there is this confusion in many people's mind that when you buy the NFT over a digital image, you're actually buying the copyright over that image itself. That's not the case. There will be two rights running concurrently and in parallel. So be very clear as to what you buy. And obviously this leads to other problems as well, because the residual rights of the NFT creator, the person who actually creates the NFT, can be limited. So the creator himself may lack ownership rights over the digital assets. And we see that happening very often in the case of memes, right? Memes is something that we all see on the internet, little short video clips, you know, and often taken out of context from videos and movies or pictures of celebrities, etc., with bubbles and words and you know, saying things that they probably never ever said. But it's funny, people like it, it catches on, it goes viral. And now many of them are being caught and turned into NFTs. Do the creators actually own the rights over the image? The answer is it is not. They do not, right? They're just selling you this token that represents this particular digital image, and that's about it. So do remember that if you are interested in the intellectual property right below the digital asset, you need to make certain inquiries of the seller to understand, do they in fact own the intellectual property rights? And if not, then you need to potentially enter into two agreements, one for the purchase of the NFT, the second clearly showing a transfer over the IP rights to you as well. Yep. Otherwise, you're only just buying a proof of ownership over a digital asset that neither you nor the creator may actually own. That is the reality of NFTs today. So do bear that in mind. And one other point that has started rearing its head now that people are all on OpenSea and buying NFTs because of people, is like, I've got to own some of this. You know, I've got to diversify my portfolio. I need 5,000 NFTs. Go out and buy it for me. As many rich people out there are saying, without any idea as to what exactly they're buying. A lot of these NFTs also have this concept of automated royalties built in as a smart contract. Now, smart contracts automatically execute. So if you're going to buy something for $1,000 and you sell it on for $2,000, there could be an underlying smart contract that says, I'm now going to deduct $500 from that transaction and send it back to the original person. And these are hardwired, they're coded into the NFT itself. So it's important, again, to make inquiries from the start to understand, are there any of these smart contracts that underlie the NFTs? Am I really going to get this value when I sell it on? Or is there going to be a deduction sent back to the owner? These are technical questions that need to be understood and asked because they lead to real impact on the value of the NFTs. And so again, another point to note, IP owners can also prohibit the creation of NFTs happening now with Marvel and all the rest, you know, so if you see those Iron Man NFTs out there, think twice about what exactly you're buying. It will not be the underlying IP rights unless you're buying it from Marvel and the Disney family directly. Finally, the issue of fractional rights. And here again, it's a fantastic thing. If you think about it, it means that you're now able to break down the value of an expensive item, whether it's a piece of art or real estate, and sell bits and pieces of it to individual owners. The same risk I mentioned before about the potential disconnect between the NFT and the underlying asset can happen again. So do your due diligence, make sure the NFTs truly give you ownership over a part of the underlying asset. And that again might mean signing documents beyond what you see on your on places like OpenSea and the rest for the purchase of the token, to also the granting of a specific fractional right over the digital asset. And that often is done by a concurrent agreement, right? Agreement which is not digital, very often a physical agreement that needs to be signed. Very few people understand that. So please do remember, when you get a fractional right, a picture of Mona Lisa, and you're told, by buying this, you're buying part of art. That may not be so. It may just be a picture, NFT over a digital image of the Mona Lisa, but not the Mona Lisa itself. This leads to a lot of confusion in the marketplace, and unfortunately, fraud can also arise. So be aware of that fact as well. Federated ownership is great, but it can also lead to arguments of securitization, which means that you're taking a particular good, breaking it down and selling bits and pieces. That's in law, in a sense, securitization, and there will be regulatory exposure for the parties creating these tokens. So real snapshot, some of the key issues to think about, and happy to take questions afterwards as well. Thanks all.
Thanks a lot, Rajesh. So much to think about here, especially, do you really own the intellectual property? Do you really own the art that you purchased? Thanks for bringing that question to us and giving us some guiding points too. I'll make sure to set up a second agreement next time as well. Are you saying, Rajesh, we should be coming to you or if we run into any issues as well?
Well, I didn't say that. Let me just make that clear.
I know. Yes, that's true. All right, the next person up is Ross Edwards. And Ross is with Ripple. You know, he's been in this business of financial services for more than 17 years, and he joined Ripple early, back in 2015. And so he's global head of client solutions at Ripple. And we worked together several times now on a couple different central bank conferences as well. So thanks a lot, Ross, for coming in today and sharing your thoughts. Ross, take it away.
Thanks, Keith. Let me just share some material. Give me 1 second.
And Ross is joining us from Australia this morning.
Hopefully that's coming through.
Perfect.
Yeah, so thank you, Keith. So I think what I wanted to talk about today was really about the movement of value and how we at Ripple are working with payment companies and banks today, and in particular how that looks in the future in relation to these new types of assets and what we ultimately see as a tokenized economies in the future. Most people are hopefully familiar with Ripple, and we were one of the earliest companies working on enterprise blockchain and DLT, and particularly with financial institutions. Since being founded in 2012, we've really been building on this vision of the Internet of Value, so making money move like information moves today. So our engagements with banks and payment companies was originally very technical exercise. However, we quickly came to understand that payment challenges are not solved by technology alone, and we've worked with institutions to create RippleNet, a decentralized cross-border payment network connecting hundreds of licensed financial institutions collaborating on payment services. It's really important to highlight the importance of the APAC region where we are to RippleNet, and I think this is very reflective of innovative services in the payments industry as a whole. APAC saw some of the earliest development of payment services on RippleNet several years ago, and it's actually still the fastest growing region on the network. So more to the point, working with payment businesses, both locally here in Southeast Asia as well as globally, we commonly see three key challenges that we're building upon. Cross-border payment services still require establishing partnerships with other banks and payment companies. These partnerships are critical. They define the services that a business can provide their customers. Finding the right partner for the right use case and the right corridor is the difference between successful services and losing business to the competition. These businesses commit significant people and resources to network building. Bringing efficiency to identify, introduce, and help on board the right partner is a significant part of innovation and building innovative services to the end customer as blockchain and other technology changes. And we've seen the rapid building of partnerships right here in APAC, with the likes of Siam Commercial Bank increasing transactional business in Thailand. But I think more interestingly, different types of payment companies connecting for services like mobile money, connecting with Bcash to power seamless wallet-to-wallet payments from Malaysia to Bangladesh. This makes a substantial difference to Bangladeshi migrant workers who live and work in Malaysia. In working with many partners across different corridors and possibly use cases, the next challenge is really how to connect with them all for a high-quality payment service. Whilst traditional payment processing means such as SWIFT are not well suited to operating these types of payment services. There are many examples of bespoke API connections, which create great experiences for end users. The problem is they just take a lot of time to build at scale. They result in growing complexity in operations and are really difficult to provide a consistent experience for users. So through RippleNet, we've provided institutions with a single API set that enables high quality payment services based on key principles, so real-time, transparency, certainty. We've got institutions connecting to new partners, enabling real-time, low-value, cross-border payment services to their customers in as little as 2 weeks. And traditionally, this would be a 6-9 month plus exercise. So we're using blockchain-based technology and techniques underneath that to ensure certainty and settlement outcomes. And this greatly reduces the needs for investigations, repairs, and returns, improving the customer experience and reducing the operational overhead and scaling difficulties. We've also enabled new functionality across these. So the wallet-to-wallet service I previously mentioned enables real-time verification of wallet and beneficiary details prior to payments being made. And this is extending to many other markets. The third key challenge that payment businesses have is funding efficiency. Typically, they need to deploy capital as pre-funding to enable high-quality payments into each corridor. This is both a key expense of the business, but also a huge constraint on growth. We've spoken to payment businesses who have had to sell parts of their business to generate pre-funding for new corridors, literally reducing their share of their business to enable it to grow. The most innovative part of RippleNet is ODL settlement method we've developed and grown over the last couple of years. This is using the digital asset XRP to settle payments in real time without any need of pre-funding or any other facility in place. As an example, payment businesses here in Australia have had to pre-fund US dollars or pesos in the Philippines to enable an efficient remittance service into that market. That is replaced with an ability to instantly purchase XRP, transfer it to the Philippines, sell the XRP for pesos, and fund the payout. Right now, this is enabling payment services or payments from Australia to Philippines that are delivered to the beneficiary in under 60 seconds. And this happens at 3 a.m. in the morning with no upfront funding required. In the last quarter, we've seen the launch of ODL services in Japan, and we've increased the receiving markets from a handful to over 20 destination countries, many of them here in Southeast Asia and also South Asia. So in addressing these key challenges, we're seeing ongoing rapid growth of RippleNet and cross-border payment services that financial institutions can provide their customers. So in looking to the future, we're not going to slow down on that cross-border payment momentum, but we're enabling our customers to be ready for the next big thing. And that's about being a bridge between a growing world of tokenized services and traditional enterprises. It's really obvious that crypto isn't slowing down. We saw CBA, last week announced launching crypto services for their customers, and we see many other announcements like that. And as part of this, we see tokenization transforming how people buy, sell, track, and manage assets. Everything from art and real estate to intellectual properties, equities, and of course, money. There are many difficulties, as Rajesh reflected upon, but the World Economic Forum projects that 10% of the world's GDP will be tokenized by 2027, and that'll be worth as much as 24 trillion US dollars. So the future will be crypto enabled and will involve the interchange of many different forms of tokenized value. We want to use our own unique experience in this space, as well as working with financial institutions to partner with enterprise for that future. We have many initiatives across these different areas, NFTs, CBDCs and others. And these are not separate projects or initiatives. They fit into this broader strategy of evolving RippleNet to provide more than just crypto-enabled instant cross-border payments. As an example of this, we recently announced our partnership with Bhutan Central Bank, the Royal Monetary Authority, to pilot a CBDC using Ripple's CBDC private ledger. Most of you would be familiar with this topic. However, a CBDC is a tokenized form of sovereign currency, so issued directly by the central bank. And we're engaging central banks to understand how they think about CBDCs and tokenization, the benefits CBDCs can bring, how that can be realized, as well as the challenges they face. In particular, we need to understand how CBDCs will interact with payments infrastructure and other parts of the economy. And as part of this, we will see increasing movement of value between different sovereign currencies and other forms of tokenized value. Ripple's CBDC ledger is based upon XRP ledger, so open source technology, and provides many of the attributes central banks want to build upon. And these extend beyond the functionality and ability to maintain sovereignty over the currency. As an example, as the only carbon negative country in the world, the XRP's native energy efficiency was a key factor for Bhutan. And I think Daniel reflected on this in the ESG part. So all of these elements are important. So as we focus on bringing value-added infrastructure to banks, payment companies, and now central banks and many other organizations, we work with them to understand and realize the future of tokenized economies and ultimately the Internet of Value. Thank you.
Thank you, Ross. And what a heartening point that was made here. And thank you so much. I think it was Christian who shared that Ripple's the most energy efficient token. So you are ahead of the green space in regards to this. Really great. All right. Well, with that, I'd like to bring up our next speaker here. And if I could welcome Ikuma. So Ikuma is head of strategy and global expansion at Digital Entertainment Arts, and which is a crypto asset and blockchain organization that also has a website called PlayMining. And PlayMining is that play to earn type of concept. And them and other companies have been able to make a huge difference in people's lives, especially during COVID-19 and the trade war disruptions. When economies shifted tremendously, people lost their positions. Coming in and being able to play to earn and put food on the table has been something that really has been an aspect. But certainly beyond that, they're just here also having fun. So Ikuma, over to you.
Thanks a lot, Keith. We are a venture company, so I'll make it like a 7 minutes pitch contest. So please bear with me. So as Keith mentioned, our service PlayMining provides the NFT GameFi services for free to all the users and give all the users equal opportunity to earn crypto asset while enjoying the game for fun. So since the global pandemic, we're restricted from many activities we enjoyed in the past, like traveling, dining in, sports activities, group activities. Just entering a hawker center now requires a Bluetooth tracking application and vaccination status to enter the venue itself. But there are several industries that has taken a big leap during the COVID situation, and that is the entertainment industry, especially the gaming sector. Let me just share some slides. And gaming is now being revolutionized and being so-called the GameFi, which is the mixture of game and finance. The concept of play and earn is now trending in crypto blockchain spaces as this lets the user to play the game for fun and earn cryptocurrency for their living, just as we imagined back when we were young, like earn living, just like the characters in your favorite RPG game. So what is exactly the difference between the traditional and this new play to earn gaming? The traditional gaming is one-sided relationship that only producers and developers of the game supplies and earns the financial gains. You cannot make any requests nor produce your own items to gain wealth in the real life. But also you are not able to sell out or refund the downloaded games once you get bored of it. And so basically the time you're spent will be your skill to play the game better than everybody else, but will not be like a direct advantage of making the profit unless you become a so skillful player to become like esports gamer, but how many percent of the total will be following that path, right? The play to earn gaming is different. So it is an open economy built by the community and financially rewards every user who adds value to the ecosystem. Developers and producers provide incentive rewards in crypto assets for users to use within the ecosystem or convert it to your favorite cryptocurrency or even the fiat currency in your region. Majority of the game uses NFTs to play the game, and those NFTs can be traded in any of the NFT marketplaces run by the third bodies. So the cards you have raised by putting the funds and efforts can be sold off once you get bored of the game. So let me take a step back, comparing the growth between the traditional gaming company. And for example, Nintendo, which is one of the largest gaming companies globally, reported $15.41 billion of net sales in fiscal year 2021 versus $12.16 billion for the previous year. And net sales growth was primarily driven by strong sales of the Nintendo Switch console itself and software for software itself, and the software sale directly affecting the hardware sales. Nintendo Switch was released in 2017 and was sold around 28.83 million units, and during the pandemic. So total Nintendo Switch sales, both hardware and software, achieved around 14.88 billion for fiscal year 2021 and 11.14 billion into fiscal year 2020. So one of the play to earn business model, the Axie Infinity, is one of the major one out there. The Axie Infinity collection generated more than $765 million in sales, representing about 83% of the total volume of the game NFT sales in August. Interestingly, activity for the Axie Infinity continues to grow, and despite the rising price in the game and game NFT industry. So now the NFT sales are more impressive. In quarter three, the sales surged to $10.7 billion according to DApp Radar here in the chart, where it was only $28 million quarter three 2020. So NFT game have already reached a record-breaking $2.05 billion. The impressive figure is thanks to more than 650,000 traders, totaling around 4.8 million transactions. And it means this single transaction inside the NFT game is to tune over $420, which at least on average equivalent around to the console itself, Nintendo Switch, which is around like $300. So what's the game-changing factor for the play-to-earn community to grow so rapidly? The introduction of the scholarship model by Axie Infinity was a breakthrough for the NFT and also the play-to-earn business model. So not all the users have the NFT to start the game. In fact, one NFT would simply cost around $300 to $400 per Axie, and you actually need 3 Axies to start the game. So there's a huge hurdle to even play a game to enjoy the ecosystem for majority of the play-to-earn business model. The scholarship model has enabled the holders of NFT to lend the NFTs to any users who would play the game on behalf, and amount of crypto assets earned from playing are distributed to the players and the original NFT owners. So that way, the investors can best maximize the hold of the NFTs as an asset class and use that in the game, as well as the players to play the game for free without the initial investment to earn their living. So this scheme has enabled every possibility and revalue the NFT asset class, as well as creating a new job opportunity, play miners, play and mining the token, which is our concept. So I believe this new business model has a potential to become an ultimate ESG, environment, social governance compliant industry. It is eco-friendly, as the user will only need an internet and mobile device to start earning, and giving the equal rights to earn the token for all gender, races, region, religion, by playing the game for fun. And socially, the holder of the token have the right to speak for the community to bring the direction of the game for an open and sustainable growth. So in conclusion, the play and earn business model, so-called the GameFi, is already part of people's life, becoming a real life time occupation that threatened the current low paid occupation actually. And since the pandemic, the industry and working environment was enforced to transform the way to cope with the digitized world and enable working from home and virtually. So the business in the virtual world, so-called the metaverse, are seen to grow exponentially for upcoming months and maybe years, and so are the GameFi spaces. And that wraps up my 6 minutes and a half. Thanks.
Thank you so much, Ikuma. Wow, and what a great picture to end on here, seeing people being able to buy rice fields or clothing or cloth that can be made into dresses and more. Very inspirational. Thank you so much. Okay, let's bring up Christian. And so Christian is the founder of Tokenomy, and also has been instrumental in changing the way people think about transferring funds and more. He's also, Tokenomy is a partner of Indodax, the largest digital asset exchange in Indonesia. And he was also chief financial officer over at Indodax. So he knows the ins and outs of cryptocurrency exchanges like nobody else does. He's also on the board of IDK Foundation, the issuer of the Indonesian rupiah as a stablecoin, which is pretty neat. He comes with a banking background. He was an executive director at JP Morgan Singapore before. So very good to have you here, that's for sure. Thank you for joining us, Christian.
Thanks, Keith. Thanks, everyone. I think it's a great opportunity to be here talking to everyone. And I'm not trying to take sides today because I'm in crypto. People know that by default, I'm pro crypto. But I'm just trying to use this opportunity to kind of explain what's happening, especially in the crypto yield market. And then I think after that, we have some panel, then I can choose another sides. But as we gather here today, we talk about a lot of interesting topics. This is somewhat a little bit boring topic because, compared to the volatility that crypto prices offers, 200-300% to 3,000-4,000%, earning a yield from crypto from 7 to 12%, it's kind of boring. But potentially with the crypto price going up, this can also be a substantial opportunity. So in the next few minutes, I'll just share a little bit about what I observe in the crypto market, especially this fixed income market development and how we can take opportunity from it. So I'll just break into 3 parts. I'll explain a little bit about history and then the current market status, and also kind of have a future outlook. First, let's just talk about history, right? So when does this borrowing and lending in crypto market starts? Actually, there are like 2 major events. The first event is the creation of stablecoin. So we all know that Bitcoin is too volatile to be treated as a settlement currency, right? The price can change widely day after day. So it's been difficult in the crypto space. So someone created this US dollar stablecoin in 2014 and introduced to the market. And fast forward to today, this is like the most, for example, Tether is the most widely used cryptocurrency in the crypto space and represents about 90% of all crypto trades. So because it's a stable settlement currency and growing in size, close to 70 billion per market cap. So there are a lot of traders that wants to borrow and investor want to lend this currency, just like the traditional market. Now, that's a stable coin. The second thing is the introduction of crypto derivatives, which is futures contracts, right? So since crypto is classified by many countries as a commodity, and crypto miners, like traditional commodity producers, whether you grow soybeans or cotton, you want to use futures contract to lock in your future returns, right? To also hedge against inflation risk or price declines. So in December 2017, the US approved the trading of Bitcoin futures contract on CBOE and CME exchanges. These is really big milestones because when it comes to futures contract, leverage is very often used. So that means with a small amount of money, investor can control a large position in the futures contract. And so this started to generate a implied interest rate for these crypto assets like Bitcoin or US dollar coins. So which also facilitate the rapid development of a crypto lending and borrowing market. And you can see on this chart that the derivative market is actually growing, exceeding the size of spot market. From the traditional financial market sense, I think this is showing that market is maturing because only sophisticated trader can trade futures contract. So this is no longer a retail dominated market, and we have more sophisticated trader in the space. And that's why I think the current fixed income market is developing due to a lot of traders and lending borrowing activities. Now, I think this is also a good segue to introduce what's happening in the market now, like what kind of yield this cryptocurrency is offering. Now, we know that in the traditional fixed income world that we usually can see the yield curve of debt-bearing instruments like treasury notes, treasury bonds, showing the relationship between the time and interest rates. Now there are yield curve forming in the crypto assets. So in this chart, you can see the most demanded crypto are US dollar stablecoins, and they are offering more than 10% yield annually. And compared to the traditional US dollar, I think this can be a very good alternative. Of course, Bitcoin and Ethereum also offering quite handsome yield. So for those people that want to hold, they can deposit them into institutions or decentralized protocols to get paid while you wait. Now, what are the types of lenders? Like who can give you this yield, right? So of course, we're gonna talk about DeFi, but there's another term called CeFi, which is centralized finance. Finance by default is centralized, but because we have DeFi now, so we kind of have to classify as CeFi, which is centralized financial institutions. The CeFi is quite simple, quite easy, because it's related to the traditional world, right? The brokers, the bankers, somehow the crypto lenders, they gather funds from investors, and then they lend them out to borrowers like traders or hedge funds, right? So this is very similar to the traditional lending space. So, but let me talk about DeFi. So DeFi allows anyone to access financial services as long as they have a smartphone connected to the internet. There's no account opening, no minimum balance. So DeFi applications include a wide variety of things that happen in the financial world. The first application is actually decentralized exchange. So we usually call it DEX. So DEX are set up to allow automatic exchange crypto assets in a peer-to-peer and non-custodial way. So for the DEX to function effectively, they need to have liquidity, right? There's no liquidity, then the trading price can be very awkward. So to earn a portion of the trading fees, the lending protocol encourages people to deposit a lot of liquidity into the protocol so that they can kind of participate in earning a trading fee at the same time the platform token. So this is usually called liquidity mining. And the other DeFi application is decentralized lending. So by the same token, they want to encourage people to put in a lot of the funds available for people to borrow, and then they share a portion of the interest rates. So this is also called yield farming, because I think a lot of smart investors, they just jump around protocols to see which protocol offers the highest yield, so they want to farm from those yield. And the third one is staking. We know that Bitcoin has a consensus mechanism called proof of work, and usually people criticize it's not energy efficient. So a lot of new protocol came in, they said, we want to use proof of stake. So proof of stake is by means you have to ask the holder to hold or stake the protocol tokens so that you can sustain the operation and security of the protocol. And in return, when they stake, they receive yield in the form of more platform tokens. For example, Ethereum 2.0 is drawing a lot of attention. So people are earning more Ethereums, like 5-6% on annualized basis by staking in this protocol. So all these DeFi protocols serve different purposes, but the common thread that binds everyone together is the focus on yield capture, right? But keep in mind, a lot of DeFi protocols, they're quite nascent, they're quite new. So there's gonna be smart contract risk, technology risk, cybersecurity risk. So we should be careful when it comes to deciding how much money to put it in. I think we have to be prudent a bit about this. Let's talk about the market size, right? So this chart on the top shows one of the top crypto lender called Genesis. They have originated over 100 billion since it started operating in March 2018. Now, assuming they control 50% of the market, the CeFi market can be as large as 300 billion. And the bottom chart shows the total value locked in the decentralized lending protocol. That's another 100 billion. So we can say roughly, 400 billion a market size. But in terms of comparing to the traditional fixed income market, which is 128 trillion, this is a very small, tiny fraction. So the market is developing, and it's definitely offering yield for a lot of people, but compared to the traditional market, we're still in a very, very early beginning. But let's talk about the future development for a minute. Now, with a very gloomy economic outlook, we see ultra low interest rates, more government stimulus on the way to drive up inflation expectations. The traditional fixed income market actually is struggling to provide good returns for investors, right? So a lot of countries actually have negative interest rate policies. So out of the 128 trillion, 18 trillion of them are offering negative returns. So you can see on this chart, I think the return bonds actually increasing. And so this is an opportunity for the fixed income market in the crypto space. Just to wrap it up, I think the difference from the traditional market between the crypto market is that crypto market will not have a negative yield, because there's no central bank in the crypto market setting interest rates, trying to control the interest rate policy. Crypto market is decentralized in nature, and the market participants decide on the interest rate based on supply and demand. So although it's a very new market, it will have very much upside potential to grow. Our purpose to set up the platform is to make sure that we have offered CeFi and DeFi lending yield offering opportunities, so people don't have to open accounts everywhere. So that's what we are trying to do. And if you have any questions, want to learn more, please just feel free to contact me. Thank you.
Thank you so much. And wow, there's a question here. Finally, Glenn has brought in, why is the yield for stablecoin like Tether higher than others?
Because, like I said, it's supply and demand. Usually when traders, they're trying to make a trade, let's just say they sell the spot by the future, they can make roughly like 15 to 20%, for example, right? So they don't mind paying 10%, because if they're getting the 10% borrowing cost and they can make 50%, that's like 5% spread, which is very healthy for the trade. So that's why I think the volatility in the crypto market also create a very lucrative environment for traders to make arbitrage trades. And then the more free money they can get, the more profits they can generate. So that's the interesting phenomenon we see in the crypto market.
Yeah. Okay. Christian, thank you so much for that enlightening view. And everyone here, this is not meant to be an investment seminar.
Yes.
We are not here providing you investment advice. So anything, and we just have to have a disclaimer, anything that you hear and any decisions that you make are completely in your own hands. So please be aware of that right from this, and this is being recorded, right? So again, please solicit the advice of a professional and certified investment advisor to make any decisions about things that you're hearing during the discussion today. National University of Singapore and all its partners, and nor the Talent Pavilion or Singapore FinTech Festival are responsible for any decisions that you make on your own financial decisions, okay? All right. Daniel, sounds like a banking seminar. Okay, so with that, we will go ahead and open up the panel discussion. So Kewei, over to you. You've got a lot of juicy pieces of meat for everyone to jump in on. And Kewei is my colleague at the School of Computing and Department of Information Systems and Analytics. And he's also working closely with the Asia Institute for Digital Finance, which was just recently opened up as a way for us to do deep research on finance. And also we have a Masters of FinTech, which Kewei is the curriculum head of as well. So I've enjoyed working closely with him. His research interests are machine learning and social science research, as well as data mining for financial applications and AI entrepreneurship. So really fun person to get to know. Okay, Kewei, over to you. You've got some questions inside of the chat also, but it's in your good hands.
Okay, thank you, Keith. So for me, I'll start with first try to connecting the dots from all of the experts, because I believe half of our audience doesn't have a strong expertise in the cryptocurrency or NFT areas. So today we have experts from various areas in the new innovations in cryptocurrency and digital assets. So I think more or less everyone have learned something new. So I'll try to provide a very brief summary to help all understand more about each one of the new innovation. Then we will move on to the debate questions about, say, whether we should have more regulation on the NFT and the cryptocurrency, and for what kind of NFT or cryptocurrency and why. Okay, so I think the history start with the Bitcoin. I think most of us knows, and at the very highest level for the normal user, it's just a foreign currency. It's a new type of foreign currency like US dollar, Australian dollar, European dollars. So once we have that kind of new currency, it's there are a lot of economic theory behind it. Say what is the value of the money, and so on. So we have long time ago for most of the foreign currency, actually it's backed by gold. Okay, today most of the foreign currencies are not backed by gold. For the student not in finance, for the students in finance, I think they all know and they learn. So the once we have the cryptocurrency, so one problem from our experts we already learned is the volatility. It's very volatile. Everybody see. So we have stable coin, which is backed by US dollars or other type of dollars. And that's why I mentioned long time ago for most of the foreign currencies backed by gold to stabilize it. That's the stable coin we heard from during the talk. And also from Christian, we learned a lot of financial terms. If you are finance students, I think you understand what's going on. But for those, say, more computing students, probably there's too many new terms to you, right? The fixed income, yield curve, what is the derivatives, and so on. So if you think of the cryptocurrency, Bitcoin, as a new type of foreign currency, then we will have a foreign exchange market, right? And all kinds of currency in the world, we have fixed income market, which is bond market, depending on the borrowing and the lending demand and supply. So we have an interest rate. Okay, so that, and say later, we have the financial derivatives for the traditional foreign currency. That's also happening very recently in the cryptocurrencies market. So that's one direction. Say we think of the cryptocurrency as a new type of foreign exchange market, and so we have a lot of new financial instruments and financial assets. So the other direction of the Bitcoin, or because underlying it is the blockchain technology, that makes the Bitcoin very unique and attract a lot of the attention. So first, to summarize, I think many of you already know, but for those of you who don't know, the key point is it's decentralized. It's a peer-to-peer network. It's a distributed computing. There's a lot of complicated algorithm behind it. So it's decentralized. So no one, like say the centralized mechanism, typically like bank or government, they control the ledger in our old traditional finance for almost all of the financial assets transactions or payment transactions. Okay, so the Bitcoin, the new cryptocurrency, the NFT, the digital assets, it's based on a new technology, which is called blockchain. And it's disruptive innovation. It could be one of the most important new innovation in the fintech technologies. So it's decentralized. No one in the world, they can unilaterally just change the ledger. It's a distributed ledger. So it has a lot of benefits over the centralized framework, which we use for 100 years for the financial transactions and payment, say settlements and resolutions. Okay, it also has a downside, which we mentioned. It's slower. It's especially the Bitcoin, the older, the first generation popular blockchain framework. It's very energy inefficient. It wastes a lot of energy, right? So it also attracts a lot of criticisms from that perspective. So we had the Ethereum network, which is based on the proof of stake. Also, we mentioned earlier, and it's more efficient. Okay, so the other thing we mentioned, that's another direction. So one direction is the foreign currency direction. The other direction is a smart contract. So because the blockchain technology, it's just digital tokens, right? So we use it to define the digital token as a currency. We can easily define it as other types of digital assets. Okay, at least from the computer science professor's viewpoint, not from the legal viewpoint. Of course, we need some complicated legal framework. So we define what exactly is the digital token represents for. But immediately, in addition to the digital currency, you can think of it as any kind of virtual goods on the internet, digital goods, right? The best example probably related to our daily life are the, say, those virtual goods in the gaming, all of the gaming platform, right? So the, say, blockchain framework can easily provide the digitized digital goods, and also more importantly, it can be traded, and that the authenticity can be cannot be changed just by a centralized say anyone that controls the platform. Okay, it's a decentralized system. So one thing very unique for the NFT, which is based on the blockchain technology, is actually now we can prove you are the person that owns a unique identified digital goods. Before that, it cannot, right? So for the physical good, there's only one copy. So you really own the product. But for the digital goods, say it's an image, it's a music, or it's a part of the movies, everyone can easily copy it, right? So every one of us can own the same, at least have the same share of the same type of file on our computer. We enjoy it. But the blockchain technology make it possible. It's like put a serial number to the digital file. So you can be uniquely identified. I own this unique copy of the digital goods. So what is the value? Is that unique copy of the digital good makes it very valuable. Okay. So similar to there's only one authentic Monet painting in the real world. Okay. So that's the NFT direction. And one step further is the blockchain technology enables smart contracts. That means a lot of programmable rules can be added to the say digital assets. So the those programmable rules can be enforced and automatically executed. That it opens a lot of possible innovations. And then also some of it already mentioned in the in our earlier experts say sharing. So the now I'll move on to, in general, why do we need to have regulations for financial products? So in general, when we have a new financial products, it's very easy. We can observe in the history there are financial scams, right? There are people trying to pretend they are selling some kind of very lucrative investment opportunities to customers, but actually it's not, right? And also in the financial markets, customer, they may overborrow it, right? And they may have, they bear excessive risk, but they don't realize that. And they may buy in the products that's not what they think they are buying or they are investing. So, and also say they are, when we have a product or the market, financial market, we also need to prevent some kind of discrimination and also unequal income or wealth distribution because of the new financial instrument. Say, I think Rajesh also earlier mentioned the privacy issue, which is also a very important issue. So if we don't have any regulations on the new financial instrument, all of these problems that may happen, right? And on the other hand, for any innovation in general, if we have more regulation policy, more rules to say, stop doing this, stop doing that, immediately it hurts the innovation, right? No one can come up new innovation, technological innovation to improve the world. And that's one thing. And also a lot of regulation, the intention is good, but the government may set the rule in the wrong way. So it completely hurt the whole industry and the society, right? So I'm trying to explain the pros and cons of the regulation in general to help the audience understand better. So let me start with an extreme example about what we are talking about, and then we can open up to the panelists to provide their view about whether we should have stricter regulations on say NFT transactions or cryptocurrency transactions. So I sometimes when I teach finance in the class, I always joke, all of the financial instrument is just like a gaming table in the casino, right? So now we have a lot of different type of cryptocurrency and the NFT transactions. It's even, it's a new market and it's like a new gaming table in the casino. So some people like to gamble in the formal way. It's speculation, right? There are a lot of investors, they will come into the market to speculate. And also a lot of these assets, they are not derivatives in the sense that they are not zero-sum game. So when we open a new market, right, people somehow believe these kind of assets in the future, the value will go up. Then it's not a zero-sum game. So at the moment, it will look like it has a positive return. So everybody will flood in. People will open up a lot of casino of this kind of gaming. And also there will be people, they go to gamble, right? So, and then at the same time, a lot of financial instrument actually has positive benefit to the society. It can shift the risk, right? The risk allocation, asset allocation, and so on. So for the NFT, does it have this kind of benefit? Say on one hand, we provide a market for the speculations to invest, to trade. but does it really have the benefit, positive benefit in some way to the society? So we need this kind of market, right? Either cryptocurrency or some kind of NFT, right? That's one thing. And then the other thing is different from other type of traditional financial instrument or market. This one, it seems to me, is less energy efficient. It wastes a lot of money. It's like we open a new casino table, but this casino table is use a lot of electricity and a lot of lighting to create the effect. So people like to play in this casino. So now I return to the panelists to share with you about, say, what kind of NFT we should have more or less regulation so it can be beneficial to the society from several views, right? On one hand, we need to protect the customers. A lot of customer, either they use this kind of new innovation for real transaction consumption or because investment purpose. On the other hand, this some kind of transaction, definitely we mentioned several like the Ripple net, right? The cross-border money transfer, it becomes more efficient. It's good for the society. Or the gaming, if the goods is tradable and the people can earn more money in the emerging country, that's also good for the society, right? Say what kind of market we should have more regulation, what kind of market we should have less regulation. So maybe we start with Daniel. So do you have any?
Yeah. So I think it's I mean, actually before I answer that question, I mean, one issue that I wanted to raise is, what is the idea behind this new technology, right? I mean, what the technology does. I mean, it's if we were to actually optimize the world of digital currencies, it means that I will have a safe and secure immediate transaction, right? So essentially, I am moving wealth from point A to point B, whereas the two agents, A and B, have 100% of certainty that the transaction will take place immediately, right? So how do we value that? Well, essentially the current system is I mean, let's say just to keep things round, right? We have about $250 trillion of assets around the world, financial assets. Okay, this assets basically take something between 1 and 2 days to settle. Right, so I'm wasting 1 or 2 days that basically I don't know where the asset is until it lands in my account, right? And this is really what the economic function of the digital currency will eventually be, right? It will basically add that certainty. What is the value of that? Well, essentially the value of that is very simple, right? I mean, if you do one or 2 days divided by 252, right? That's roughly speaking about 60 basis points, right? 60 basis points times $250 trillion, you basically land with roughly speaking about $1.48 trillion a year of savings, right? So the question is, okay, so how do you make sure that those transactions are 100% safe, right? And here is basically, it really is the path dependent on each country, right? I mean, some countries are more focused on capital controls cross-border. So for instance, you know, countries that trade on non-deliverable forwards, for instance, every single foreign exchange transaction tends to be regulated in some shape or form, right? Again, by definition, right? Because you cannot deliver the currency unless you have authorization from the central bank. Some countries are less careful about foreign exchange transactions like the United States, but are a lot more careful about financial transactions in general, i.e. if you transfer more than X dollars from bank account to bank account, you should know that that transaction will be reported to the US Treasury, right? So, so again, I wouldn't say that there is a rule that fits all. This is definitely going to be something that is a lot more country specific, right? But we do know what is the value of it. I mean, again, the value of it is, again, using that simple calculation that I made before, we're talking here about $1.5 trillion, right, a year. It's a lot of money that is on the table, right? That if central banks and regulators around the world tackle it properly, right, this could improve efficiency in financial markets substantially. Right. And again, I would first divide between countries that have capital controls and those that don't have capital controls, and then take it from there.
Thank you. Thank you. Yeah, I think I totally agree that for the cases, the settlement cost is very high. Using the new technologies will provide a lot of benefits. And of course, it's definitely similar to the financial market and financial instrument. Probably the best policy, best regulation, it depends on the situation in different countries, right? And also for different type of markets. So maybe Rajesh, do you have any view on this? I think lawyer may have different views because more regulation will bring in more profits.
Not really. No, I mean, seriously, for lawyers, I think the more economic value there is, the greater it is for everyone.
Okay. Yeah.
Yeah. So in a sense, I suppose, the need to sort of create confusion and uncertainty and doubt, which some lawyers thrive on, it's not really where I think the more progressive practitioners practice in. What we want is, as you rightly point out, certainty, right? That certainty means people know exactly what they can and cannot do, and then they can start designing their products and solutions much more efficiently and quickly, right? Because that uncertainty actually leads sometimes to procrastination or fear, and then people don't create because they're not sure whether or not they're breaking the law. So in my mind, that legal certainty is necessary. So some regulation that's not intended to control or curtail, but regulation that's intended to clarify and expand people's mind view is what we need. So we find that sort of regulations a combination of policy thinking as well as hard law. Policy thinking, because today I think a lot of the crypto space lends itself to some regulation where clearly you're trying to securitize something, right? And you're selling a security, like selling shares, for example, in your company. You need to be clear to the buyers what is it that you're selling, right? So there are some places where regulations clearly are required, but for other areas, they are not. So the expansive use of NFTs to attach itself to all forms of digital assets, should there be some law that says, no, these kinds of goods cannot be NFT'd, to use the word as a verb? The answer to that is that will be a very discriminatory and a very destructive regulatory framework. And that's not the approach taken by regulators like in Singapore, where our approach has always been inclusivity and enablement. That is the approach, the correct approach for regulations to take. And so I think if we start from that standpoint, then we're on the right track when you're dealing with nascent technology. So this is not something new for many jurisdictions. In Singapore's context, for example, we also follow the principle of technology neutrality, which means you don't dictate a specific type of technology that people need to use to achieve the end outcome. And you see examples of that, for example, long ago in the early days during digital identity, the creation of the Electronic Transactions Act, and recognition of all forms of digital signatures. Unlike some other countries where certain types of signatures were recognized and others were not recognized. And then you realize over time that's not a smart thing to do. So I think that is the wise approach. You need some law, some regulation to provide certainty so people can do business, and NFTs have certain value of respectability and acceptability. The other point I want to make is that you also need laws and regulations to validate an industry. For those who are familiar, we look at blockchain associations and all that. They've been calling for some degree of regulation because that regulation validates their business model, makes it real, makes it recognized, understood, and people know what the OB markers are. So that validation power that regulation brings in must not be discounted. So those are some of the positive points with regard to regulations, provided it's done in that broad, expansive, enablement-based approach. Regulations can do more good than harm.
Yeah, thank you very much. Yes, I think I missed that point. And then, yeah, I think I also learned a lot from the, say, lawyers' legal viewpoint. Say the regulation can enable the business model, right? Because it clearly defines the rules, how the companies, they should design or provide their products and services. And also customer, they will study to trust the business model and the product and the service provided by the providers. So, yeah. That's a very important point. Say it's an enabler to the industry. And next, Ross, do you have any view about this, especially for Ripple? Yeah.
Well, I mean, I think taking the question as what in NFTs is going to succeed and what won't. NFTs a technique to build a decentralized operating model around something unique. It's not it's not a business model in itself, and it's not a category. It's a way of doing things and achieving things. So there are many different types of usages of NFTs. And I think it's really important to understand that in this space, it's not a replacement of law and regulations. It's not, some people take it as, well, if you've got NFTs and this decentralized operating model, then it's like Bitcoin. It's the Wild West and you can throw out all the law. And that's not really how things are going to work. And I think CBDCs is another case in point. Central banks aren't going to deploy a CBDC because they want to just get rid of all their policies and all their laws. What they're going to do is build these solutions and mechanisms that supports the policies and laws they come up with. And the same is going to exist in the NFT space. Having said that, my thoughts are, I grew up with a certain colloquial law repeated to me, usually when my older brothers stole something from me, and that is possession is 9/10 of the law. And I think what that'll drive at the moment is some of these NFTs are inherently, the decentralized record inherently delivers benefits. And I think the best case of these is Ikuma talked about, gaming NFTs. I've seen, going all the way back to CryptoKitties, you could make CryptoKitties and create new ones. Now, some people could ask what the utility in that is, but that was a pastime for people. I've seen NFTs of imaginary or pretend races, with race horses and these things. I think we'll see that these types of use cases leap forward initially, but we'll see the other types, start to catch up, because it takes time for policies, legal, aspects to change. So it's going to take a long time for things to happen in some spaces, and you'll see, NFTs with intrinsic value, from that ownership record in the decentralized operating model, leap forward first. But ultimately, I think there's a huge, future for NFTs. As per my, sort of discussion, I think, the tokenized world is the way of the future. And I think, what's going to drive that is going to be liquidity. And that's certainly where Ripple's focus is, in providing the infrastructure to enable that liquidity.
Thank you. Yes. So, yes. So in terms of the NFT, and so probably Ikuma can share with us, say, what are the regulations you already see in this industry that may help or hurt the virtual goods in the gaming industry? Because I think naturally, when I first saw the NFT, I do feel virtual goods, especially in the game, right? That's a very natural applications, because we already have a lot of virtual goods even before the blockchain, right? The people actually can buy and sell on some websites, can share. So how does the blockchain make this more efficient or more secure, right? Less spend and so on. And do we need regulation, more or less regulation? Yeah, Ikuma?
Well, yeah, as you mentioned, there has been this kind of system. Digital item goods isn't something that came up recently. I've been a huge gamer since I was like 9 years old, playing Counter-Strike and everything. And all that time, they didn't have any like skins, or they didn't have any digital items that they sold in Steam and platform. But recently, like Razer has announced that Razer Coin, and you could use that to purchase the skins, and all these mechanism isn't something new. I mean, it's been there for a while. What has changed is that in this play to earn model that we are announcing, is that the users are able to use the NFTs, digital items, and sell that off in the marketplace where it's public, where Steam and other Blizzard games and EAs have their own platform, and they're not able to sell the items once they purchase from primary developer and producers, which is the EA and other IP content providers. But in this space, in this play to earn business model, everybody has the right to sell off the items and utilize that. So with that being said, there is actually a different regulation in terms of the countries, and of course what you mentioned about selling the characters, the level up items, not legally in websites called RMT, the real money trading. These are heavily restricted in Japan, and of course in the USA as well, because that actually creates the balanced distortion. By if you spend $1 million in the items, you'll be able to win the game, and you'll be able to that kind of tolerates and it affects the overall gameplay itself, so that it's been restricted in most of the countries. But in this sense, the projects who are developing the game itself is working hard and talking with the community who are using this, who are playing this game, to stabilize the game and provide the fair play to the game itself. So, regulation, of course, is very important. Like, for instance, a play to earn model, there is some of the conflicts coming on, like hiring the scholars to play the game for earning living. That may become like an occupation, or that might be becoming like a job opportunity. And of course, some of the countries like Philippines restrict the users to play if you're under 18, because under 18 cannot work in those kind of environments. So those kind of regulation actually have to come in place in order to secure the kids' routine, and to put into the studying rather than going to the game itself. But it's just that this the regulation has to work perfectly, or it has to go into the balanced way, so that it doesn't really affect all these innovations and what's coming up in the future.
Thank you. Yes. So now maybe we open up to the audience about any questions. Any questions to our expert panels?
There's a few in the chat.
Oh, yeah. Let me see.
There's one from going back up. There's one from Nair.
Okay, yeah.
Panelists, if you're looking at the SSI aspect.
One observation that I would make, actually, it feels to me from the questions coming across in the chat room, and that people are sometimes a little bit confused between the technology and the coin and the asset, right? And here, let's take, again, the various types of coins. You have the Bitcoins and so on and so forth. Then you have the technology, which is essentially the token, right? And the token is literally just a conduit for transactions. And then you have the combination of the two, which I think the best example could be stable coins, right? Essentially, you attach a token to a number of underlying assets that back the currency itself, right? And many times I think that, and those three things, in my opinion, are very different, right? The first one is, you're trying to speculate to some extent in what currency will dominate, right? So again, here, Ether is a good example, right? I mean, it has a lot of technology embedded in it, and so on and so forth. And then you have on the other side Bitcoin, which is very liquid and very large, right? When it comes to stable coins, again, they are backed by a bunch of assets, right? And so on and so forth. So I think those three things, NFTs, stable coins, and digital coins, are completely different from each other, right? And people tend to sometimes mix them as if they were the same thing, right? But they are not, right? And I would see them as almost like completely different asset classes, like, bonds and equities, right? I mean, bonds does one thing and equities do another. They're both financial assets, right? But again, what each one of them does to the holder is very different, right? And I think that it's probably a good time for regulators and the academia to some extent to spend some time looking into these things and explaining, right?
Yes. Yeah, thank you. So, yeah, I think there's an interesting question. Maybe the expert can share with us your opinion. The question is, there are so many new NFT projects being launched every day. How do we decide what is reliable and what is not? So for me, actually, I also have the same question whenever I see a new NFT project. So any one of you can share your view about this question?
I mean, first up, I sort of have some sort of view. And I think the first thing to understand with some of these things, and we've reflected in stablecoins, but NFTs as well, is there's this simplistic view of something's decentralized or it's not, right? It's decentralization versus centralization. When in fact, there's actually this intense web of different aspects being centralized and decentralized. I mean, if you look at if you look at Tether, right? It has a decentralized operating model in that I can peer-to-peer, exchange Tether, send Tether to Daniel, let's just say, and no one can necessarily stop that or govern that. And there are various different blockchain protocols that I can do that on. But the asset itself is centralized. It is issued by an issuer who you are relying on to have assets behind it, to have liquidity behind it, to back it up. And I think NFTs are even stronger on this sense. The fact that it's an NFT has nothing to do with how reliable the issuer is. So you need to look at those multiple layers. You need to look at why is it an NFT and is that providing benefit? You need to look at what protocol it's issued and exchanged on, and do you trust that protocol? There are protocols out there that fall over, right? So do you trust that protocol? You need to look at the platform that's connecting the issuer with the protocol, and then ultimately you need to look at the issuer, and there is a form of trust there, and there is a form of centralization. And this whole idea that suddenly you throw centralization out the window and everything's decentralized is not right. There's different aspects to look at. So that's very much, my view. Personally, I would be very cautious about purchasing an NFT unless I understand what it is and who the issuer is, and have some level of trust there.
Thank you. Thank you. Yeah, I do agree. That's a very comprehensive answer to this question. So we need to, there are several layers, right? So business model, whether the decentralized, it has the decentralized benefit over the centralized business model. There's a technology layer, what are the protocols, and also the credibility of the issuer, right? So probably everything is fine, but the issuer just say something, but they never did anything. They never executed very well. Yeah, thank you.
Yeah.
Any other views about suggestions about this question?
Yeah, Kowei, I just want to share a little bit about this question. I think, in the new technology, right? Being confused is, you should take it by default. Like, everybody's learning a new thing. So don't be afraid to say, I don't know. Actually, I don't know a lot of things. I've been in the industry for 8 years. I'm still learning. So just imagine, right? You grab someone from 1985 until today and give him a smartphone, he'll be equally confused. What is this app for? What does this app do? So let's see all those icons. So I think we're in the same situation, right? People are learning, okay, this icon is you can order taxi, this icon can make you laugh for like hours, this icon you can learn things, this guy you can order food, so eventually people know the utility of what's behind each token. So I think there is a gradual adoption process. People need to learn, we feel comfortable. And during that process, I think a lot of the bad actors will be, kind of faded out, because people, you can't cheat people in this internet world, right? Yeah, based on reviews and everything, I think people want to be honest for the longevity of their business model. So I also want to kind of counter argue Daniel and Rajesh. I think you mentioned like safety, certainty is great and regulation is good, but again, we're talking about the new technology, the next generation. Just imagine, right? If you have certainty for the next 30 years, you know exactly where you're gonna live, what you're gonna do, life becomes really boring. So I think a level of uncertainty is great, especially for the younger generation. I think they need to be trained to face uncertainty, right? So that they can develop that agility, the ability to cope problem, not seeking guidance every single time. Because I think the world has developed very dynamic now. So I think people need to make decisions on themselves. Whether you want to do this, want to buy this, you need to take full consequence. If you want to do this, okay, but you know what if you lose money? I think that's a lesson. I think government also, I really respect Singapore government, because I think it has a sandbox and just open architecture, infrastructure for people to just try new things. Just like drug development, you can't make the perfect drug in one time. You have to go through many trials and experiment. I think the same thing applies to technology. So I think more experiment is very healthy for the industry.
Yep. Thank you.
Yeah, I totally agree. There's good regulation, there's bad regulation. So let's focus on good enabling regulations and not bad constraining regulations. If I may also contribute to this point, the way we look at this issue of new technologies is not necessarily regulation isolation. To me, to answer the question that was there, you need to look at verification, accreditation, and validation models, right? And if you look at validation models, these need not be formal. You don't need any regulation for that purpose. It can be industry validation in terms of a new technology or a new way of doing something. And I think there's a lot of weight that needs to be given to that, especially in new areas like NFT. But when it comes to monetization, then questions like what we see in the list from our participants will come in, which is how can I know what is real and what is not? And then you need verification capability. Verification does require some degree of third party to come in and to say that, yeah, this is correct, this is not correct, this statement is true, this statement is not true, this value is fair, this value is not fair. And that's where, some degree of regulation comes in to provide certainty. And then beyond that, there's also the issue of verification, right? And beyond verification itself, technology can also play a role there in terms of technologically verifying it by, for example, no trust systems in place. So trust is taken out of the equation altogether because the technology verifies and ensures that what the NFT particularly does in fact apply itself to this specific digital asset. So use blockchain, that layer of trust is not required anymore because technology takes care of the verification. And then you also then come probably to the highest level, which is accreditation. Accreditation is where regulations in a sense does come in because accreditation means you're setting certain standards. Some people will fall below the standard, others will meet the standard, some will exceed the standard. And there again, it means you need to set KPIs and parameters as to what is accredited and what is not accredited. That comes in at the final stage very often. The problem I often see in regulation is people jump straight to the need for accreditation, setting standards, saying this is good, this is bad, this is right, this is wrong, this is legal, this is not legal. There's no space for that in new technology. So let's forget for now an accreditation model, or let's put it on the back burner. Let's focus now on validation, which is industry driven. Let's focus on verification using technology. So trust is taken out of the equation and you use trust built-in systems that by itself, such as blockchain technology, removes the need for a form of trust-based model where the lawyers and the judges and everyone else comes in and say, yeah, trust me. So that would be my approach to a new technology.
Thank you. Thank you. Any other panelists have the say different opinion or the more to answer this question? No. If no, then we can move on. I think there's another question that
yes. Chaiju raised his hand and turned on his camera. So I always like to prioritize people.
Sure.
Show themselves. Come on in, Chaiju.
Hey, thanks. Okay. Yeah, I'm a newbie to this technology and I'm very interested, and thanks to all the panelists today, I learned plenty of it. But now, however, being a Singaporean, or I'm here. So where can I find a one-stop place? Let's say, is it the regulatory part? Who is setting up the regulations? Are they affirmative, or is it ongoing? Or let's say I want to set up an NFT market tomorrow. Where can I go to?
So I'll take a stab. At least I mean, in the United States, the first stop is usually the regulator itself, right? So if you are in Singapore, you definitely would be advised to visit the MAS website and basically just ask that question in the website, and there will be a number of articles that will be coming out on things that, and ways that they have been looking at this. Okay. Many countries are lagging, many countries are leading. Okay, I have to say that unfortunately the US is probably at the bottom of the pile. I mean, when it comes to regulation and advice, the US is really bad right now. I think Asia is actually leading that space. So you have a lot more information and it's a lot more transparent. Again, just the fact that we're doing what we're doing right now shows you how advanced Singapore is right now. Okay, so the fact that we are talking to each other, right, already tells you how much has been happening in Singapore. So I would definitely advise you to go first to your own regulator rather than trying to chase what is it that the Fed is saying, what is it that the ECB is saying.
Okay, got it. Thanks. Thank you very much, then.
Thank you for the question.
Thank you. Yes.
Yeah,
So
I just would like to add on as well that, I totally agree. I think, in the context of Singapore, the MAS website has got a fair bit of material that you'll already be able to find online, and they go far further to actually explain the law in layman's terms so you can actually understand what are the regulatory constraints. But in addition to that, also, I would strongly suggest, looking at some of the chat groups that are available online, simply because the law is changing very rapidly in this space, to the extent where there are extra legal issues that you need to take into account. For example, technology standards that are constantly changing in terms of the technology stack you need to create your NFT. The changes in terms of international law, because remember, again, your market when you create an NFT is not just Singapore, it is global. That's how big you need to think of if you list, an NFT on OpenSea. So knowing the law in Singapore in isolation is not enough. It's more to understand the interplay between different legal systems on that instrument. So there are quite a few Telegram groups, etc., that focus on NFTs and things like that. So go online, look for those discussion groups, subscribe to them. A lot of noise, but in between you find some nuggets of really good information also. So that's, for example, how myself as a practitioner, I find very useful content. It's from those places. My foundations are built on the regulatory construct, which you'll find on MAS and other sites. But to go beyond that, you need to get involved in the discussions that are going on. There are also other players like Blockchain Association of Singapore and other players in the Singapore marketplace who do quite a bit of thinking. They organize courses, roundtable discussions where laypersons and experts can come together and discuss issues. So do go to them. And of course, SG Tech in Singapore, and in particular, some of the chapters that deal with NFT and digital instruments, they put out all kinds of materials on the SG Tech website, and again, organize many of these discussions. So you can keep in touch with the latest that's going on in the space.
thank you, Rajesh. I think there's a question directly, maybe more for you. Can you recommend some reliable Telegram channels for us? So maybe you can you can type here or just share. Yeah.
I was trying very hard not to.
Okay. Yeah.
Only because some of these are closed discussion groups. So it's a group of lawyers who just say whatever they want to say, knowing that they know everyone else that's in the group. And then the others where we have regulators who will not say that they're regulators, not just Singapore, from other places, who come in and say, yeah, this is interesting, but if I were a regulator, then this would be my position. So so the better ones, I'll be very frank with you, are often closed groups. So they control, people know who each other are, and you can openly speak, right, in good spirits, wanting to improve the positions. Yeah, I mean, maybe offline, I'll be happy to share one or two of those that you can sign on to, but I can't post those on an open forum.
Yeah, no problem. Thank you. So yeah, so to follow our discussion, there's a question about when we are talking about blockchain NFT, the focus is the decentralized. If everything is decentralized, how would it be possible to effectively regulate all these activities? That's the question from the audience. Yeah. So anyone want to take this question? Say if the blockchain NFT, the nature is decentralized, how can we effectively regulate all these activities?
There's no need for everything to be centralized for it to be regulatable. Something becomes regulatable when you need the model to be validated, or for it to be, seen to be acceptable to the market that you're trying to make that product or instrument available to. In other places, of course, you need to comply with the regulations the moment you try and bring it into that country. So someone tries to control, for example, virtual currency because it messes up the socioeconomic balance of countries. They'll pass laws and regulations, or they'll issue their own central bank, digital currency to counter the publicly available cryptocurrency. So those are the sort of ways in which people react. It does not have to be centralized. A lot of technology today is decentralized by its very nature. One example we touched on was gaming. So, like many of my colleagues here, I'm a big time gamer from very young as well. And you always buy loot, right? You buy products, services. I got multiple avatars in different games that are still alive today, and each one of them is my digital identity, right? And I keep those very jealously. I even have a Second Life digital identity floating around somewhere out there from many years ago. And those are decentralized digital assets created multiple forums. They don't all have to be centralized for it to be regulatable. They become regulatable when you try to take those products and do certain regulated activities, right? Or to provide certain regulated instruments into a market, then the regulations will come to bear. So that's the same model as existed before will still continue to apply today. So intellectual property law, for example, applies in a decentralized manner. Copyright, for example, does not need to be registered. There's no registry for copyright. You assert copyright. I say I am the one who is the author. I put a little C and the word copyright. That's it. I am asserting copyright. There's no copyright registry in Singapore. No need for centralization for something to be regulatable or for the law to apply to that digital asset class.
Yes, thank you. Yes, I totally agree. So the probably to some of the audience, the decentralization is on the more like the technology level, right? So how we record the transaction, who owns what, that's the more like the lower level. But I'm not a legal expert. I'm more like an economist. So I think the regulation, we can regulate whether the company they can provide some kind of product or service in a particular country. Right? That's the way we can do the regulation, whether they can open out the market in a particular country. So I think this one probably make it more difficult because it can easily across the border. It's like the internet, right? When you think about the peer-to-peer network, it's a peer-to-peer sharing, right? It's how to say, it's in some sense it's also decentralized, but a lot of countries, they also have regulations whether this is legal to share, that's not legal to share, illegal to use this or not legal to use this. So it can still be regulated. That's my superficial view about this. Okay, so yeah. Any other questions? Let me see. Okay, there are several others. Yeah.
Hi, sorry. Could I ask a quick question?
Yes, go ahead.
Hi, Rajesh. You mentioned Telegram groups, very good source of information, but it's very noisy. So are there like
As I said, yes, it is very noisy.
Any person or resources that actually compiles all these nuggets? They comb through everything and compiles it so that it's easy for us, people who don't really want to go and go through all the noise to pick out the nuggets.
Yeah, one good way is to get involved in some of the associations that I mentioned before, like the Blockchain Association and the SG Tech groups, because what happens is the members often set up their own groups, discussion groups, and need not necessarily be Telegram. It can be on WhatsApp and other platforms as well. And then those individuals will be people who are really committed, passionate about the area, and they then try and keep the noise levels down in those discussions. But I'll be very frank with you. I find the noisier ones actually much more useful if you've got the time and the effort to actually sow through, because one or two of the nuggets I picked up in some of the public discussions have been extremely good. Sharing of contents, material. There's so much thinking happening internationally, right, on issues with regard to NFT, cryptocurrency, and all forms of digital assets, digital asset protection. That I like I say, if you join the SG Tech and the blockchain, you often get a Asia-centric, Singapore-centric view, which is very important for us here. But the larger ones are international in nature, and then you have groups of different individuals, lawyers, etc., that I spoke to you about, who will have a lot of noise, and one person will start making more noise than others, and you get sick and tired. And I have muted people on Telegram groups. That's possible, right? So you find too much noise from one or two people, you might actually mute them and then listen to the rest of the stuff. So it's more of a practice that you may want to undertake. As you're speaking, I'm actually trying to go into my Telegram group to see whether there's any that I can share. If I find one or two, I'll post them on the link on the chat.
Okay, thank you.
I think just reflecting on what Rajesh said, it's important to understand that I don't think this is a highly competitive space in that if you go to these associations, and Rajesh named a few in Singapore, and I know the Blockchain Association here in Australia has many sort of events that bring together these people, you're going to find a lot of help from people who have already done it, already tried it, already made mistakes, these sort of aspects. And I think the other thing that I would say is, particularly probably more on the technology side, go and do it. There's a lot of opportunities to participate, to use test nets, to do small things, get involved in a project. Don't be afraid to do it. It's not a sit back and you need to fully understand the blockchain world and NFTs to detail to be able to start doing anything. I would just say go and get involved.
Yeah, thank you. Yes, I think there are a lot of new things. I want to learn in this area. So a lot of time for professors to learn new things, we have to teach the class. So today's session makes me want to teach the blockchain class in the future, so I can have more chance to learn and really try out all of those things. Yeah. Any other comments and inputs from the expert panels? And yeah. So earlier we have a question. So related to our discussion, there are a lot of new terms, new things keep coming up in this area. So one of the earlier questions we haven't addressed is, how does the metaverse will drive more of the, say, NFT, or how will we affect the NFT adoption? Any view?
You had to go there. So that brings my Spider-Man analogy into play. In terms of the metaverse, it's such an exciting place. Again, it's not a new concept. If you read some of the old sci-fi novels, it's been around for a long time. It's been there for gaming. We all live in the metaverse, in the gaming world. Essentially a parallel universe that runs in tandem with the real world. What's happening now is that people are talking about it in a more serious manner. We're looking at moving e-commerce models that traditionally used for goods and turning it to e-commerce model for digital assets. And then you create an ecosystem for buying and selling digital assets in a virtual world, buying virtual property and staying in that property and things like that. And so a lot of people are pulling back examples of things like Second Life and saying, look, Second Life failed, so the metaverse will also fail, without understanding that that was a very different world 11 years ago. 11 years is more than a lifetime in the tech space. It's beyond a lifetime. It's an epoch ago. In 2021, what we're dealing with in metaverse is a very different construct. We are in a mobile-driven world. We are used to the concept of having virtual discussions like this that you see going on today, and we are more than comfortable, buying and selling digital goods and assets. So that's the world that we live in today. And so now it is a real construct. The role for NFT and blockchains there is a significant one in terms of proof of ownership of digital assets in the metaverse and as a means of payment for the goods and assets that are tradable on the blockchain. I also see it potentially as an instrument used for trust-based mechanisms. So you use NFTs basically to carry out trusted services on the blockchain and to share trustable information packets using NFTs as the verifying point. All of these are still new discussions. There are discussions that we need to go deeper into to look at actually monetizing. It takes up roughly about 40% of my professional life now in terms of dealing with metaverse related issues. So I'm very excited by it. It's very real. It's not just a theoretical construct. It's not just a sci-fi book anymore. It's very real. And we now finally have the technology, the instruments, the wherewithal, and the public interest to want to move technologies like NFT into a much broader, expansive virtual world that we call the metaverse.
Yes, thank you. Just for the audience who doesn't know, I think we mentioned Second Life several times. It's actually like starting from 10, 15 years ago, it's a virtual world called Second Life. And I think conceptually it's very similar to metaverse today. Yeah, but at that time, if you remember, we just started to have smartphone. And also we just have 4G. The key point is it's very, very slow, lagging, right? Also the internet connection issues. and your computing powers issues. And but there are already a lot of virtual real estate properties, and also large company, they build the storefront and the advertisement in the Second Life virtual world. So now today, after 10 years, the technology already much more advanced. We have faster internet connection, more powerful GPU, CPU, and also the blockchain enables the proof of ownership, as mentioned by Rajesh, and also the payment transaction, everything is much easier, more efficient, secure. So now maybe this time the metaverse will become more successful compared to the Second Life 10 years ago. Yeah. So do we have other, let me see, do we have other questions? Any
I
other?
have another question.
Yes.
Yeah, I was wondering what the panel's views are on DAOs, you know? What do you think the maturity level is, and when do you think it's going to come on stream? What are the pitfalls of DAOs?
Yeah. So distributed autonomous organizations, so the acronym is DAO, is going to become a real thing. I think the reason why is because the Ethereum is the driving force, and technologies and platforms like Solidity, the programming language behind Ethereum, is now gaining traction because of NFTs. It's just a short hop away from that to the setting up of distributed autonomous organizations in a real sense. But besides the Ethereum construct, the concept of the distributed autonomous organization, just for the benefit of everyone, is the creation of this coming together of people to carry out a common purpose. So what we used to previously describe as companies, for example, becomes irrelevant or redundant, because you can set up this construct of people coming together and creating value of conducting business without registering a company. And by extension, it also means without paying the corporate taxes, right? And that's where the lawyers and the regulators start, pulling their hair and saying, this cannot be. How can you set up an organization and not register it under any company registry? Because you are illegal, you're invalid. So I think those kinds of questions will still need to be asked moving forward. And I think a lot of interesting discussions coming up there. I don't want to dominate it. I'm sure others have other thoughts on it as well. But certainly many people are watching that space, including myself. I expect there to be a lot more interest.
And the best example, I guess, is Airbnb, right? I mean, you can only imagine, how disruptive this technology could be to a company like our Airbnb, right? If basically two individuals, one in Singapore, another one in Bali, could actually connect with each other and exchange their homes for a certain amount of money for a period of time, and then basically avoiding all the fees that Airbnb will charge for that transaction. I mean, and then multiply that at a level. I mean, it's quite remarkable what you could do on that. Again, the same goes for Uber. The same goes for almost anything out there, right?
Yeah, it definitely has a huge impact on the platform business, which is all those examples. I think, what's going to be a massive constraint is, the typical problem that it's really effective when everything goes well. It's when things go wrong that you fall back and rely on the likes of Airbnb and Uber and that sort of thing. So, there is a lot of the DeFi that we talk about, a lot of these sort of aspects, a borderline DAO, type arrangements, I think. So it's going to continue to grow, and it'll continue to handle more complexity, which will start to handle these exception cases and when things go wrong, and no doubt they have a strong future. And I think all of these things are tied together when you talk about metaverse and these sort of aspects. I think DAOs are going to be an important aspect of that.
Thank you. So now probably the time is almost up. Let's go around the panelists to provide the final conclusion and advice to our audience. Some of the audience, I think they are the students, they just started to learning, or they are the people the earlier career, they want to find a job in the fintech industry, or they want to start a business in fintech industry. So what is your advice to our audience? Say what kind of NFT area they need to pay more attention to learn to start their career or start a business? Yeah, let's go around the table. Maybe we who want to go first?
Yeah, I mean, it's just a really exciting space, and it's never too late to enter this space. Even though the Bitcoin has been there since 2009, and it's already 10 years, but more than 10 years. but it's never too late. I mean, the second to Christian saying that, I'm still learning. There's so many things, and it's really hard for me to catch up all these DeFi space and NFT and DAO movements. But it's exciting and it's very challenging, and you need to comply with the regulation. You have to actually create the regulation together with the regulators in order to bring this innovation forward. So just want to highlight that part. And it's all these cryptos, you hear the ICO scams and the fraud. Of course they are there because the technology and it's still advancing, right? And it's just that you have to deal with it, but it's nothing that's going to bite you. So yeah, have fun and don't be afraid to dive in, because a lot of people are going to the space and they're trying to create the new era and not to they are always looking for innovation space. So that's one I would highlight. And some of the thing that was like mentioned which was interesting, that is that the crypto is having like a fraud, like wash trading, like a team benefiting energies spaces. I think Rajesh mentioned that part, but it's just that the current service is already doing that part as well. So it's not fair for the crypto to getting a stab on that part. Like, wash trading, of course, that they can hire the outsiders to bid the art itself, or like a team benefiting, like, there's backdoors for the sneakers. I'm a personal fan of sneakers, but like, there's so many backdoors going on. It's just not, it's not specific to the crypto itself. There's always problem. There's always frauds in every spaces, and crypto and blockchain is not the specific one. It's there for. So, don't be afraid. It's never too late. And ask questions, get into the Telegram chat, and yeah. Feel free to question anybody in the space.
Thank you. Thank you. I think the one on top of my screen is Rajesh. You want to provide some conclusion and final advices to our audience?
So it's you guys are very lucky to be where you are now in learning and getting to this space. There's so much that's going to be happening. The start of the metaverse, imagine that you're going to be telling your grandchildren that you were there to see it. And so what that means is a lot of opportunities in the tech space to be involved in the accreditation systems, the validation systems, get involved in standards and standards building. There are many organizations like the ISO and BSI groups. They're looking for people who want to come in and help them think through the nascent standards. So if you're involved in those standard building exercises today, it's something you can speak about for many, many years in future, for yourself. So look at it from a career building standpoint there. Get involved in the communities that are in place. Like I said before, there was a question about where can I go for all of the answers? It doesn't exist, right? You can go for certain kinds of information, but you need to get involved in a discussion yourselves. Share your own views, your own thoughts, because nobody is right or wrong here. And that's a fantastic feeling. When I first started doing technology law, nobody understood. Everybody thought I was mad, but it made a lot of sense to me. So I'm sure there'll be many of you out there as well who would see this as saying, this is what I want to do. This is my life. I want to get involved in this in building exercise of the metaverse. And NFTs and crypto are going to be a cornerstone of that digital economy. That sort of attitude will take you very, very far. So be participative, share as well. Don't just absorb. Please do that. We always have this habit in Singapore of just sitting very quietly and listening, not because we are rude. It's just we thought it's the right thing to do, but it's not the right thing to do, right? Share, make mistakes, learn, get along with others. And that's how this is a very social experiment that we're dealing with the metaverse, with the digital economy. So please do expect the two-way process and you'll go very, very far.
Thank you. Thank you for all the very encouraging comments. So Daniel, would you provide some the final advice?
One thing that I would add is go for the markets where the growth is, right? So if I was to decide whether to initiate a venture in India or in the United States, I would take India hands down, right? Not only because there's 3 times as many Indians as there are Americans, but because they are so underbanked, and because the opportunities for growth there are so humongous, right? So when it comes to many of the emerging markets and fintech and digital currencies, this is really where the value is. And I think, again, Singapore is sitting right in the middle of it, right? So if geographically you have a great venture, standpoint within the region and across emerging markets. So I would definitely not get too excited about the fact that things look very transparent in the US or Europe. I would definitely go for the markets where they are underbanked and where the number of transactions going forward should be the largest. So again, emerging markets is really the place to be.
Yes, thank you. Thank you for the comments about emerging markets. It's the best opportunity for these innovations. So Ross, so what is your final remarks?
Yeah, I mean, I think, two things, in some of this discussion and the questions, etc. One of the things I would say is don't get confused about how something's achieved or using what infrastructure versus what it is. And I think that's what some of these buzzwords and terms do to people, right? If you're going to buy an NFT, you're not buying an NFT, you're buying something specific. Now you can choose not to understand what that is, but it's not purely defined by the term NFT. It has an issuer, it has other rules and things behind it. And don't, these are very, there are very different types of NFTs and look into that. And I think that that's what makes it exciting as well. I think more broadly, in terms of looking to the future and what I think is important, in terms of tokenization, crypto, all these sort of spaces, I think Ripple is very focused and thinks the future is around liquidity and enabling exchange of these things, which is dependent on liquidity. And that's certainly where our focus is in building infrastructure for liquidity as part of the future. And I think as most other people on the panel are reflecting, I think it's super exciting. There's been many challenges named and talked about today. And those challenges are what makes it exciting, because those challenges will be worked on, they will be solved in different ways. And this is changing at a rapid pace, as we're already seeing. So the future in this space is certainly exciting.
Thank you. Thank you. Yes. Yeah, there are many new opportunities. And I totally agree. Say for the audience who just started to learn this space, maybe you can start with the non-technical part, right? The what exactly is this type of NFT rather than the underlying infrastructure. Don't confuse these two. Okay. So our last panelist, Ikuma. So could you provide us some final remarks?
Can I provide that first?
Oh, sorry. Yeah, Christian.
Yeah. Thanks. So I'm not a lawyer, so I don't have all the answers. But I think we have been given a lot of good advice, and I would say just a complete thought is don't worry about regulations. Use your common sense, because if you're a kid, you ask your parents for everything, but as you grow up, think about you do have independent thinking skills, you have the critical thinking skills. You want to build a business, just make sure you don't cheat people, you're honest to everyone. So eventually the law's not gonna chase after you. So use your independent thinking skills when you do make judgment. I think that's the one thing that we can all do. The other thing is government will catch up, right? So this is a developing industry, so regulation will come to protect the good players that are trying to build innovations. And for the government that are taking hard stances, for example, Chinese government just banned outright, all the cryptocurrency activities. Then, crypto players flee, right? They go to US for mining activities. And there's even one Chinese exchange trying to build a DAO in the metaverse. So, the purpose of DAO is actually to avoid top-down regulations, because the regulation in the blockchain is consensus. So as long as everybody agree, then it becomes a law. It's endorsed by math, it's endorsed by consensus. So I think that's the kind of a new regulatory movement. If for a democracy country, of course, everybody's voice counts. So I think that's really important. Don't just always look for top-down approaches. And lastly, I think the emerging market is what the focus should be, because I think in the developed market, we just take for granted, such a great government system and fair treatment on regulations. Everybody's on level playing field, but there are billions of people in the emerging market, they don't have that. So blockchain actually provides them a level playing field. As long as they're smart, they can code, they can create something, and they can build their own ecosystem. So I think my advice is don't really just focus on regulation so much, and try to focus on building a business, try to unleash your creativity. I think everybody will benefit again. Thanks.
Thank you. Thank you. Thank you all. So I hope all of the audience can learn a lot from our today's sharing about the various kind of innovations, cryptocurrency, NFT, digital assets. So this area is really fast changing. So I think if you want to learn more, please pay attention to our website. We have a lot of training classes at the FinTech Lab, NUS School Computing, and our master program. So you will learn much more about both the business model, use cases, and the technologies, say underlying infrastructure for all of the exciting innovations. Now I return to Keith to make the final conclusion of our session.
Wow, guys, gals, this was phenomenal. I really love this session. I was thinking that I would learn a lot and certainly exceeded my expectations. Thank you, Rajesh, Daniel, Christian, Ikuma, Ross, and Kuwei, our great moderator here. I mean, fantastic to have heard from everyone. And Rajesh, thank you for sending in that Telegram groups there. I'm certainly going to be looking at that too. It'll give me a reason to actually use Telegram. I've been very conservative about it. So thank you so much for the inspiration too. I like the point that was made, collaborate. And so Maria, one of my colleagues here at the FinTech Lab, she's going to post everyone's LinkedIn in the chat here. You're welcome to collaborate. That's what the FinTech ecosystem is all about. There's a lot of new things coming up. There's a lot of things that need to be done. We can't just do anything on our own. So people's LinkedIn are there. Feel free to connect in. Be respectful, of course. Everyone's super busy. Make sure to connect with the right things there. I'll put my LinkedIn there as well. In order to learn some of these things, I got some comments. This was a great session. Panelists, I got some comments already about the session. Great session. Glad to have learned more. Got to find out, what was it? Opportunity to get literate in this area as well. So job well done. That's what the Talent Pavilion is all about. And so with that though, if you got interested in this, I want to highlight something for everybody, which is our FinTech, NUS FinTech SG program. Our next information session is tomorrow at 3 p.m. from 3 to 4:30. This is where you can really get into this. You get to build smart contracts. You get to hear from guest speakers during the whole time. And it's a 3-month program. Sponsored though by Scales Future. So I'll put that information here as well for you all to take a look as well. And then ultimately, we have a big set of events for the rest of the day. Don't leave. This is just the beginning. So please don't hang up. We have a number of events that are going on right now and more, and I'll share that. But I just want to take a quick picture with our speakers. And if you'd like to come off of and turn on your camera for just a moment and join our speakers here on the stage just to take a picture together, that would be wonderful. I'm going to take a picture of everyone here in about 10 seconds. So that's the amount of time that you'll have to get your hair ordered and in place and everything. Let me make sure my hair is all good too here. Okay, good, done. 10, 9, 8, 7, 6, 5, 4, 3, 2. Camera's coming on. 1. There we go. Let's go get those big smiles on there as well. Thank you so much for coming in today for this. Really nice to be able to see some faces out there. There are real people out there listening to you guys. Don't worry, it wasn't just AI or robots just now. Thanks again. Let's give the panelists a round of applause, right? This was really great. Great work, guys. And here's what's coming up next. And what we'll do is we have a few things that are going on right now. We have our FinTech Startup Lounge, Rutent talking about what it's like to launch a startup. That's just about finished, actually. And then we do have our, well, I think they might hang around a little bit. I know the speakers here will hang around a little bit as well, right, guys? Yes? Yes, if you want to network with them, maybe some will leave, some will stay, but we'll see. You can still spend a little bit of networking time here. 11 o'clock, we'll have the Startup Lounge again with Stacks. And as we go through, we have a Monetary Authority of Singapore Human Resources panel. So don't miss that at 11. Also, we get into the senior roundtable, which is going to be very exciting. We'll have a past Japanese senator who also very much comments on the current prime ministers in Japan, Kotaro Tamura, speaking there, as well as Ching Ching Tan, who's heads up our Poly FinTech 100 from Ning'an Poly, and also Mr. Ko from Microsoft, Richard Ko, who leads who's CTO at Microsoft. This will be an exciting session. Come back at 2 o'clock for that. And we've got more what's in demand master classes, so you can try things out, get your hands dirty by various organizations as well. It's going all the way until 7 p.m. today, right here at the same Zoom. You don't have to leave your, you can be walking on the golf course and also listening to the Zoom, whatever you would like to do. That's the convenience that we're in today. Rajesh is right, 11 years ago, so different from today. And Rajesh, great to know you're also on Second Life. Maybe we'll meet up over there if we dust off our avatars, okay? All right, guys. Thanks again. Take care, everyone, and look forward to seeing you in a number of the events or at the information session tomorrow about NUS FinTech SG.
Thanks, everyone.
Thank you.
Bye-bye.
Thank you. Bye.